So what are the three phases? The first is to map the entities. This particular tax is basically for your compliance team. But if you don't have, you can still do it by yourself. What you're doing is to list out all the countries where your business is domiciled in. After doing that, you're going to check if your Nigerian business has up to 50% of the controlling shares in those subsidiaries registered in those other countries. If your Nigerian company has up to 50%, the CFC rules applies to them. If they don't have, it doesn't apply to them. Number two, check the threshold. What you're doing here is to check if those subsidiaries, the taxes they are paying is up to 15%. So you would know what you're remitting back to Nigeria. If they are more than 15%, you're not remitting anything to Nigeria. But if they are not up to 15%, let's say they are 10%, you know that you still have to pay 5% to Nigeria. So you're checking the threshold. And the third is to restructure. You are adjusting your ownership if needed in those subsidiaries. Like I said, for the first one, if your ownership is not up to 50%, the rules do not apply to your Nigerian business. But if it's up to 50%, then it applies. So if you want it to apply or don't apply, this is the point where you have to do that. And also check how profits are handled, because that's another way you can avoid the CSC rules. And this is the end of day 14. I can't wait to see you on day 15. If you have any questions, kindly send a DM. I'll be ready to answer you. But for today, this is Tamna Nemi and she is signing out. Bye and God bless you.